The Ponzi will break. They still will have to peg to gold. The inflationary systems cannot be restarted like that because they require trust, and the trust will be completely gone. And a lot of people are going to realize they're very, very poor, and I don't think they're going to be in the mood for, stable coins, things like that.
You're watching Silver News Daily. Subscribe for more.
They've lied to you. For over half a century, the entire global economy has been running on a confidence game. Fiat currencies backed by nothing, printed without limit, and sold to the public as money. But that illusion is starting to shatter. The cracks in the system are no longer subtle. They're screaming. And as the trust holding up this house of cards evaporates, the world is about to learn a brutal lesson. When fake money dies, only real assets survive. And silver, physical, tangible, indestructible silver, is about to explode. We're not talking about a slow rise or a gentle climb. Number. This is the type of move that comes when decades of suppression give way to raw, uncontainable panic. The price won't just rise, it'll launch. Triple digits aren't some distant dream anymore. $100 silver isn't a fantasy. It's the logical consequence of a fiat system in terminal decline. And when that moment hits, it won't be subtle. Those holding paper wealth will watch it evaporate. Those holding silver? They'll watch the world change. This isn't just a price prediction, it's a warning. Because the signs are all around us. Central banks scrambling, inflation reawakening, interest rates choking the system, and public trust collapsing under the weight of its own delusion. And while most people sleepwalk into poverty, a small group, stackers, hard asset holders, and monetary realists, are preparing to be on the right side of the greatest wealth transfer in modern history. So what exactly is driving this shift? Why is silver, out of all the assets, poised to detonate higher as the fiat experiment dies? Stay with me, because once you understand what's coming next, there's no unseeing it.
Not be going up right now. But the stock market just was going up as if we was the biggest party we've ever been in. And my Austrian training said, even if I hadn't put all the pieces together at that time, my Austrian training said something is definitely wrong. And so over the course of the next few years, I've educated myself, and now I'm educating others. And the answer that I would have for that question is that part of a Ponzi scheme, and the Federal Reserve note is no doubt in my mind a Ponzi scheme, part of a Ponzi scheme is a mass psychosis of everyone involved in the Ponzi scheme. That's precisely how they work. Somebody comes out with something of absolutely no value, convinces people that it has value, and then they start pumping it to their friends and their friends and their friends and their friends, and the Ponzi scheme grows at an exponential rate until it blows up. The initial buy-in, right? In 1971, when Nixon, took us off the fixed gold standard onto a floating gold standard, and then Volcker had to, and that was gonna blow up in 1979 until Volcker raised rates. They looked like if you had bought silver, and when silver went up from $1 to $50 in 1979, and you jumped in on $48 thinking, oh my goodness, the dollar, the Federal Reserve note's done, we're back on a silver standard. And then, 6 months later, it's down at $1 again. You got blown out of the water. And I think a lot of people, especially people that were in the sound money community, probably thought that the Federal Reserve had done something to conquer natural money. If I was engaged in monetary transactions at that time, I would say, wow, it looked as if Paul Volcker conquered natural money. Natural money was trying to rise up, and they did something, and now everyone just wants dollars. And it looks like they were right after all. The Keynesians were right after all. And it's taken, what was that, 1980? So it's taken 45 years for this process to really get reversed. I mean, there were episodes of reversion, 2000, 2008, 2019, but now it's really looks like it's getting reversed, and I think people are going to start rushing back to natural money again. But just to answer that question, I have talked to people in my family, and these are not tie-dye wearing, kumbaya global, communists. These are very conservative. You describe these people as extremely conservative, but they don't understand that gold is money. The Federal Reserve, to them, the dollar is a note of production value of America, and we're an industrial superpower, and therefore, the dollar is what it buys in America, and everyone wants the dollars because they want to buy American stuff, and they're just not persuaded. Trying to convince them that something wrong was done to our money is like trying to convince a brick wall. Now, some people can be convinced and some can't. But to answer your question of why why the general public is asleep, it appears to be some sort of mass psychosis where we've just convinced ourselves that this was so, and it will be, reality always wins in the end. It's natural law. But,
Confidence is the currency of fiat. And right now, that confidence is crumbling faster than anyone expected. After the 2023 regional banking collapse rattled the system, 2025 has only made things worse. Commercial real estate defaults are stacking up, regional banks are still bleeding, and credit is tightening like a noose. The once invisible cracks in the system have burst wide open, and people are beginning to sense that the money in their accounts might not be as safe or as real as they once believed. When trust dies, fiat follows. But it's not just the banks. It's the whole illusion of stability that's breaking down. Central banks told the public that inflation was transitory. They said they could raise rates and tame the beast. But 2 years later, core inflation remains sticky. The cost of living is grinding down the middle class, and the Fed is boxed in, unable to hike, too afraid to cut. Investors are waking up to a terrifying truth. There's no easy way out. Every direction leads to more chaos, more debt, more monetary distortion. And in that fog of uncertainty, what are the smartest players doing? They're abandoning the system. Gold demand from central banks has hit record highs. Silver ETF inflows have reversed after years of decline. Billionaires are stacking metals, not stocks. Because when faith disappears, money runs for cover. And in that moment, the masses will realize what the few already understand, that the dollar, the euro, the yen, all of it is just paper. And paper always burns. That's where silver enters, not as a commodity, but as a lifeboat. As the fiat Ponzi unravels, we're approaching a moment where people won't just want silver, they'll need it. And while most still scoff at the idea, history shows us what happens when trust collapses. Precious metals don't just rise, they explode. And the biggest shock of all? This isn't the first time. We've seen this movie before, and every time it plays out, silver ends up stealing the show.
the effects of the Ponzi scheme is what's called, what I believe it was Mises called the illusion of prosperity. It might have been Hayek, but I believe it was Mises. He called it the illusion of prosperity. So because number go up, because because your job gives you $1 raise, and because your house, the dollar value of your house is going up, people feel as if they are wealthier than they were before, even though it's the opposite is in fact true. In fact, over a long period of time, people do sit back and say, why do I feel poor? However, during the process of inflation, people in each individual moment in time, every time you get a promotion at work, or you get a cost of living adjustment at work or whatever, or every time your house value goes up before the tax man comes to take a big chunk of it, you think, oh, I have become wealthier than I was before. So as long as that mass psychosis is going on, as long as that Ponzi scheme is working, people will put up with an income tax, marginal, what did you call it? Capital gains tax. All these people will put up with that because the number's going up and they're still being fooled by it. The Ponzi will break, and we're going to have to revalue to gold. Now, whether the question is this a situation where the gold is locked away in big vaults, big government-run vaults, and we can't get at it, but here's this paper that says it represents that gold, and don't worry your pretty little heads about how much gold is actually in there. They still will have to peg to gold. They won't be able to inflate any. The inflation will be dead. The inflationary systems cannot be restarted like that because they require trust, and the trust will be completely gone. So the question then is, on a non-inflationary system, when everyone realizes how poor they are, and I'm worried we are actually quite poor. I think we can rebuild. I don't think we're destined to starve to death. But I think the aftermath of the blow, the crash is going to be absolutely enormous. And a lot of people are going to realize they're very, very poor. And I don't think they're going to be in the mood for, stable coins, things like that. I don't think it's going to work.
Just before we get going, we just launched the official Silver News Daily Telegram. To kick things off, we're running a 10-ounce silver giveaway. Yes, real physical silver, not a voucher, not digital credits, actual bullion. This Telegram will be our new home for real-time silver discussions, market insights, collection picks, and everything precious metals. It's where the community truly comes alive. Here's how to enter the 10-ounce silver giveaway. Be subscribed to Silver News Daily on YouTube. Turn on the notification bell. Comment 10-ounce giveaway on 3 separate videos. Be an active member of the Telegram group and say hi. Once we hit 500 active Telegram members, we'll pick one lucky winner to receive 10 ounces of silver shipped directly to you. So get in early, stay active.
Throughout history, whenever the world has faced monetary collapse, silver has always returned, not as an investment, but as money itself. Long before central banks and fiat currencies, silver was the backbone of global commerce. From the Roman denarius to the Spanish pieces of 8, it wasn't paper that facilitated trade. It was silver. Empires rose and fell with it. And in times of crisis, when currencies were debased, it was silver that the people turned to. It was silver that held the line. But somewhere along the way, that memory was buried. Fiat currencies took over, governments promised stability, and silver was demoted to an industrial metal. Yet that demotion was never organic. It was engineered. The 20th century brought a coordinated effort to strip silver of its monetary status, from the abandonment of silver coinage to the demonetization of bullion itself. Why? Because honest money is a threat to dishonest systems. A currency that can't be printed undermines those who benefit from printing. But now the tide is turning. The collapse of fiat is forcing a revaluation of everything. And silver, once discarded, is being rediscovered for what it truly is: a monetary anchor. A store of value, a weapon against inflation and central bank recklessness. And unlike gold, silver still wears 2 faces, one monetary, one industrial. That duality makes it uniquely explosive in a financial reset. When the population realizes that silver isn't just a relic of the past, but the future of money, demand won't trickle in, it'll flood. And here's the kicker: silver doesn't need to be re-legitimized by governments. The people will do it themselves. Just like in every monetary crisis before, when currencies collapse and institutions fail, silver will rise, not because it's flashy, but because it works. And in a world where trust is vanishing by the day, that utility becomes priceless. But this time, silver's comeback isn't happening in isolation. There's another force, quieter but just as powerful, that's already begun draining silver out of circulation forever.
More and much, much better. You can look at I've said this before, look at the houses we were building on the gold standard, the 1890s to the 1910s. Look at the Art Deco. I posted a picture on Twitter of what a train car looked like in 1904. It was a 1904 train. It was absolutely beautiful. I mean, brass railings, oak benches with, upholstery. And this was just, this was a light rail, It was to get from Cincinnati, suburban Cincinnati into the downtown or whatever. I don't remember what city it was. And the ceilings were hand painted. The ceilings were hand painted and, just everything, and the houses look the same. Look at a Victorian house. They are absolutely gorgeous. In fact, I saw one, the door, you open the door and the inside of the door was ornamented because they didn't want it to be, when you open the door, they want it to be pleasing to the eye, that you're looking at the inside, the width of the door. They did not want that to be just plain, So you can extrapolate that to absolutely everything. Not only that, we would have had almost no wars on a gold standard, or far fewer wars. There's still, obviously there were still wars on a gold standard, but especially for a democratic republic, which we claim to be, if people knew the actual the actual cost of what a war costs, we would have, revolted a long time ago. If Nixon had said, yeah, the Vietnam War is costing each of you, 40% of your salary in America, they would have said, absolutely not. That's outrageous. For that, no way. So we would have lived in much more peace. I'm not saying we would never have had a war, but we would have lived much more in peace. We would have much more prosperity. If you do the math of what a technical worker made in the let me rephrase this. A industrial worker in New York City made something like, and this is like just off the boat. You just got off of Ellis Island. Your cousin Yaroslav, hooks you up with at a shop in New York, and you start industrial output. Their wage paid in silver is the equivalent of like $90,000 today. And that's I'm telling you, that's right off the boat. Speaks no English. Here's a hammer. Here's a nail. Get to work. The telegraph operators were making, in that, that's the equivalent of like a computer engineer or something, $200,000 a year in today's dollars, because they were being paid in ounces of silver and gold. So you can just, and there was no taxes, there were some taxes, but much, much lower taxes. So imagine you're making, $200,000 and you keep all of it. What you can do with that wealth. So yes, absolutely. And when we go back onto a gold standard, and hopefully we stay there for many generations to come, I predict the prosperity that we once enjoyed will absolutely return. I am not despite my fear of the crash, and I fear it every day. I wake up saying, "Oh, is today the day?" But I remain wildly optimistic of the medium future within my life. Within a few years of my life, I think we'll be back.
Silver is disappearing, and not into vaults or safe deposit boxes, but into factories, solar farms, and AI data centers. The very metal that once lined coins and backed currencies is now being hardwired into the global infrastructure of the future. And here's the catch. Once it's used, it's gone. You don't recover silver from a solar panel. You don't extract it from an EV circuit board. It's not being stored. It's being consumed permanently. This is the industrial trap that no one is talking about. In 2025 alone, the solar industry is projected to swallow over 200 million ounces of silver. EVs and electronics? Another 180 million. Together, that's more than 55% of all global silver demand, and rising. And this isn't some temporary trend. Governments worldwide are doubling down on green energy mandates, AI infrastructure, and electrification. Every policy decision, every innovation, every new factory adds to silver's disappearance from the market. But unlike oil or copper, silver supply isn't keeping up. Mine output is falling, new discoveries are scarce, and geopolitical friction is freezing expansion. This means that while demand surges forward, supply is slipping backward. And the silver that gets consumed isn't coming back. It's being buried inside technology, scattered across devices, and vaporized in the manufacturing process. This isn't just a bullish signal, it's a structural trapdoor. The world is building a future that requires silver to function, but no one's accounting for what happens when it runs out. Investors think they can just buy paper contracts, ETFs, or derivatives. But what happens when industrial users can't get the physical metal they need? When solar manufacturers are forced to outbid investors for the last available ounces? That moment isn't theoretical, it's approaching. And when it arrives, silver won't just rise, it will detach from the paper price entirely. Because in a world where industrial demand consumes more than what can be mined, and investment demand suddenly wakes up, there won't be enough metal to go around. And it gets worse. Because this industrial trap is only one side of the coin. On the other side, a supply chain in freefall.
I had my bars, I got all serialized bars, and I had them email me the serial numbers of all my bars. And at some point, I'm going to run a test where I just say, send me bar XYZ123 and see if I get that exact bar. I haven't done it yet, but that is my plan. If you're going to vault in the US, I would pick a state maybe like Florida or Texas, that the states that's the most likely to tell the feds to go shove it if they go and try and grab their repositories. If you're worried about seizure, Cayman Islands, Switzerland, those are probably wherever, Monaco, the sunny places for shady people, wherever the warlords of Africa or Zelensky, wherever he puts his money, that's probably a good place, because it's going to be in It's going to be in a country that doesn't ask too many questions. Yep, you might want to do it there. The only problem is liquidity. I mean, you're going to have trouble getting the physical money if it's in the Cayman Islands. If you need the physical money, it'll have to be converted back into dollars and sent to you. It'll be converted into whatever the new dollar is and sent to you that way. If you have it in Texas, even if you're not, I don't live in Texas, but I could theoretically make the trip, I guess. I don't know how much things are going to break down, but I think, there's pluses and minuses to vaulting within the U.S. or without the U.S. I don't predict massive seizures of private vaulted gold because, like I said before, in 1933, everybody had a little bit of gold. Now only the rich people and a few libertarians have all the gold. The rich people that are the demonic overlords or related to the demonic overlords, and a few libertarians have all the gold. So they're going to be seizing the gold from their own cadre. I don't think they're going to do that.
Silver supply is collapsing, and unlike past cycles, this isn't just a temporary dip, it's a structural breakdown. Global mine production has been falling steadily, with 2024 output down another 2%, and 2025 projections aren't much better. The largest producers, Mexico, Peru, are facing lower-grade ore, rising extraction costs, and growing political instability. Projects that were supposed to add millions of ounces to global supply have been shelved or outright canceled. And that deficit? It's no longer a warning, it's here. In 2025 alone, the silver market is running a shortfall of up to 180 million ounces. This is the kind of squeeze that should set off alarms. Because silver isn't like other commodities. You can't just flip a switch and ramp up production. New silver mines take years, sometimes decades, to develop. And even then, silver is often a byproduct of other mining operations like copper, zinc, or lead. That means the silver supply is doubly vulnerable, not just to silver prices, but to the economics of entirely different metals. Add in the rise of resource nationalism, governments pushing back against foreign ownership, raising taxes, or shutting down operations altogether, and the picture becomes even darker. Peru's Santa Ana revival? Stalled. Mexico's Fresnillo expansion? Delayed. The result is a supply side that's not just tightening, it's being choked off entirely. And while this might seem like an obscure mining issue, it's anything but. Because when you combine a collapsing supply base with rising industrial demand and a financial system on the edge, you get a pressure cooker. A setup where even a small uptick in investor interest can blow the lid off the market. And the next domino to fall? It's already wobbling. Because while silver leaves the ground slower than ever, the vaults that store it are being drained dry.
Of it, they can dormant it by offering alternatives, which is credit notes that they've been offering before. So to answer the question, how long does silver stay money, really depends on how well credit is trusted on the other side of the crash. Now, initially, with the initial stages of the crash, silver in any form is going to be fully monetized. So you're talking, if you have an ounce of a silver necklace, you're probably going to be able to get an ounce of whatever an ounce of silver will buy. If you have private rent, because the government hasn't made silver currency since 1965. So before the moon landing, right? Or no, I'm not going to get into the moon landing. Your clientele probably have different views on that. Competing views on the moon landing. But before the moon landing was announced, silver was fully monetized, was a currency in circulation. Sorry. So the last time we had silver quarters and silver dimes and silver half dollars was 1965. Because of that, we're going to have to use whatever silver we have lying around post-crash. Private rounds are fun. That's why, some people say, you have to have constitutional. I don't think so. I think private rounds will do just fine because there's no alternative. If somebody's, and some of the hoarders, some of the people are saying, well, I'm not going to take anything that's not constitutional silver. That's fine. Maybe you won't, but your starving neighbor sure will. When they need food to eat and you say, I've got silver, it's a private round, but it is silver, it will absolutely work. If you understand what money is, you understand that silver in any monetary form, which is a uniform weight with the weight and purity stamped on it, that will work as a money. Now, in the initial aftermath post-crash, the mints are going to start minting in silver again. They're going to have no choice. The government's going to have to start, minting actual silver coinage again. And at that point, the previous silver I think even the constitutional silver is probably going to go dormant as a money again, because people are going to say, well, I want the new silver dollar. I don't want the old. I certainly don't want the private round, and I probably don't want the constitutional silver as for monetary transactions. I just want, I want whatever the new coins that are coming out as. And people, the government will probably say, hey, give us your old silver and we'll just turn it into coins for you, and we'll give you new silver back. And the question is, how long does this last? If the credit is and this is assuming a true free market, purely free market. I'm not talking about government intervention or government trying to get us away from silver again. If the credit is trusted, so everyone absolutely trusts the credit, and the gold is honestly, the Federal, I'm not going to say Federal Reserve note, the new dollar, whatever the new dollar is honestly backed by gold, and everyone trusts it, and credit's working fine, then people may not need silver anymore because gold credits are more efficient than silver. So we may see silver go dormant as a money just by a property of the free market. However, we may also not see that trust develop, and silver really is the money of, like, if you want to buy bread, or you want to buy meat, or you want to buy shoes, you really want to have silver for that. So silver is the retail transactional money. And if the gold credits are not trusted by and large by the populace, which I think we'll probably not see credit trusted for decades after this one. I think we're going to be paying our electric bills to a meter man who comes by and collects silver. I think it's going to be that. So I think we're going to see monetized silver for decades, but we may not. And I'm not an expert.
COMEX is running on fumes. Once the mighty reservoir of institutional silver, it's now scraping the bottom of the barrel. Registered inventories have collapsed below 90 million ounces, the lowest level in over a decade. At the same time, the futures market is flashing red. Bullion banks, once infamous for their massive short positions, are quietly backing away. JP Morgan, Citi, the big players, they're cutting exposure, reducing risk, and repositioning toward physical metal. Why? Because they know what's coming. For years, COMEX functioned like a magician's trick, paper promises backed by a shrinking pool of real metal. But now, the illusion is breaking. Industrial users are demanding more silver. Retail investors are stacking harder than ever. And ETFs, once hemorrhaging ounces, have reversed course with over 50 million ounces flowing back in since the start of 2025. The squeeze is on. The difference this time? There may not be enough to go around. Here's the reality. The paper-silver market has always depended on one critical assumption, that only a tiny fraction of contracts would ever demand physical delivery. But with global trust in financial institutions unraveling, that assumption is being tested. And if just a small percentage of traders stand for delivery, the entire COMEX system could freeze. Prices wouldn't just spike. They'd detach from reality as the market scrambles to find metal that simply isn't there. We're entering dangerous territory. The disconnect between paper and physical silver is growing. Inventories are vanishing, and the big players are no longer trying to control the market. They're trying to escape it before it implodes. And yet, despite all this, the average investor still hasn't caught on. Mainstream portfolios remain almost entirely void of silver. But that ignorance, that apathy, it's the very thing that makes what's coming so explosive.
If you are a stacker, a silver stacker particularly, I would start disgorging your hoards at 30 to 1. And if it hits 15 to 1 or goes below it, I would go out and buy houses by the city block again with your silver stacks. Just buy whatever assets you can at a rush. What will it stabilize at? 20 to 1. For truly honest money, this was the problem in 1873. It has to have a floating exchange rate. You can't have a silver dollar and a gold dollar. One of them must be a dollar, and the other one can be a unit of currency, but it has to be separate, and there has to be a floating exchange rate between the two. Because the problem in the 1870s and before was that people would take out a loan in gold. So I would borrow $500 from you in gold, and then I would use that money to go dig up a bunch of silver. and then I would pay that loan back in silver. And because I had extracted silver from the ground, there was now more silver in the world than there was before. And so the gold silver ratio dipped down, but I owed you $500. So I just showed up with $500 of freshly minted silver and said, here you go. But the gold value had gone up relative to the silver value. So the two have to float against each other. And you can't have a fixed, what was it fixed? It was $20.67.
Silver is the most under-owned asset in the world, and that's exactly what makes it so dangerous to ignore. Despite everything, historic deficits, industrial bottlenecks, collapsing inventories, precious metals still make up less than 0.5% of global investable assets. Let that sink in. While trillions chase overpriced tech stocks, speculative crypto, and bloated money market funds, silver remains in the shadows. Quiet, unloved, unnoticed. And that's exactly how asymmetric opportunities are born. In a world flooded with liquidity, it only takes a tiny shift in sentiment to create a tidal wave. If even 1% of global capital reallocated into silver, the market would be overwhelmed overnight. There simply isn't enough supply. The vaults are too thin, the miners too slow, the deficits too large. Prices wouldn't just rise. They'd launch into orbit. And this isn't speculation. It's simple math. But it's not just institutions that are asleep. Most retail investors are still hypnotized by the digital casino. They don't see silver as a hedge. They see it as boring, outdated, irrelevant. And that's the tragedy. Because the time to own silver is not after the headlines hit. It's before the world wakes up. Before the window slams shut. Before the price gap's so fast that no one can chase it. Analysts like Rick Rule have been sounding the alarm for years. This market is undercrowded, undercapitalized, and misunderstood. And that means the upside is unlike anything else. When silver finally reclaims its monetary identity, the capital rotation won't be gradual. It'll be violent. And when that shift begins, you won't want to be standing on the wrong side. Because when a suppressed, essential, and scarce asset collides with a collapsing fiat system and a global revaluation of value itself, what you get isn't just a rally. You get a detonation. And that moment is no longer theoretical. It's already begun.
Fixed rate will cause a problem. And this is the problem. This is a problem that requires like 110 IQ to understand. It's slightly above average IQ to understand that it must be a floating exchange rate between currencies. So you always get this midwit government bureaucrat who says, we just fixed the gold silver rate. Why are we letting it float against each other? Just fix them, and then we'll have this problem. We'll just have a single thing called a dollar. But when you do that, you create all kinds of problems with exchanging the two currencies. In fact, whichever one, because of Gresham's law, whichever one is more valued gets hoarded, and whichever one is less valued gets spent. So you automatically will drive one of those currencies into everyone's basement, or one of those monies. People will either hoard silver and spend gold, or they'll hoard gold and spend silver, depending on which one is dear relative to the other. So if you let them float, then they'll both spend. But there's always going to be some midwit who's going to ruin the economic system by just I'm just going to fix that one thing, and then
The monetary reset is no longer a distant theory. It's unfolding right in front of us. Trust in fiat systems is dissolving. Industrial demand is swallowing silver at a rate never seen before. Supply is drying up. COMEX is cornered. Public interest is non-existent. And through it all, silver sits quietly, mispriced, misunderstood, and massively undervalued. But not for long. Because as faith in paper currencies collapses, something ancient and immovable will rise to replace it. Gold will lead. But silver, volatile, reactive, explosive silver, will follow with a vengeance. And this time, it won't be a slow climb. It will be a violent repricing as the world returns to honest money. The gold standard isn't just being discussed, it's being prepared. And when it returns, the wealth transfer it unleashes will be historic. Those who hold silver now will be positioned like few in history, not just to survive the collapse of fiat, but to thrive through it. As the financial system is rewritten, stackers won't just protect their wealth, they'll redefine it. In a world where dollars buy less and less, ounces will buy more than ever. And those who dismissed silver as a relic? They'll watch from the sidelines as the greatest revaluation of our lifetime takes shape. So don't let the quiet fool you. The storm is already here, and when silver breaks free, it won't come back. If you're watching this, you're early, but you won't be for long. Make sure you subscribe to stay ahead of the curve. And remember, this is not financial advice. Speak to a professional before making any investment decisions.